Okay, right. So now we're going to move on. So my trading tip of the week is about fundamentals. So fundamentals, the fundamentals, learn about the fundamentals if you're unsure of them, because they determine the market direction, the trend and the volatility. And that is really important to you as a trader. If it's not, there's something wrong. It should be. Market data, what the central banks are doing, what they're talking about, what they're, people expect from them, what traders and investors expect from them, and from the government. And you've almost got the central banks and governments on opposite sides at the moment. And then you've got QE, which we've had and has gone now. We've got QT, which is now happening. And then it's a matter of, how aggressive that's going to be. Personally, I still think central banks should be selling off their assets at a faster pace to reduce their balance sheets down. Just allowing them to mature is so passive. For me, it's just ridiculous that it takes them so long. If the US carried on at 95 billion a month, it would take them 8 years to get down to zero. They'd never get to zero, but you just get my point. Okay, interest rates, obviously you've got to keep an eye on them, the expectations for them, what's priced into the markets, what's expected there. And of course, interest rates are impacting the stock markets, and there's almost an inverse reaction at the moment to what's going on there. Inflation, of course, it's still high. Is it going to stay high? Personally, I can't see it coming off that much at the moment. It's really sticky. Employment is high, but I think you're going to start to see more and more jobs withdrawn, or there's going to just be stale jobs there. That high level of job offers are going to disappear, especially as the recession hits. Now, job losses. I'm not 100% sure on job losses. Sorry, I'm getting a little bit into macro again here, but the reason for the job losses may not be as high is because these companies may be scared that they can't actually get the workers back again when the recovery comes, because they've been hurt by it this time round. They've really struggled to get staff. And then, against the fundamentals, we've got the technicals. Now, I always say, fundamentals drive the market. The technicals, we use them for timing, to improve our timing for our entries, our exits, and where to place our stop loss. So, if you're not up to date on all of this, either go on the internet and learn about it, or contact us. We do courses on all this stuff. We're here to help you as much as possible. Okay, so let's move on to our technical analysis. Just a little reminder in case any of you are fresh to this. The black numbers on the right are support resistance levels. The brown numbers are breakout levels. Any claret numbers, they're just levels that I've either identified, or they could be based on double or triple tops or bottoms. I've got some Fibonacci in there this week, so just bear in mind for that, for the colours. I'm sure you know them anyway. The lime green just above the red is the big one. That is the golden ratio there. So, okay, so let's look at some of the markets. Stocks had a bit of a mixed week, reacting to the market data that came out. Obviously, the Fed, and everything that's been going on. So I've added the fibs onto a few charts this week as well, just to give you a little bit of insight what's going on there. So anyway, let's start with the Dow Daily, and on here I've got resistance at 34,038 and 33264. Support I found at 31740 and 31293. Okay, so here's the fibs on here. So the Dow's the only one out the stock indices where it's actually got through any of the fibs yet. But you can see from there it's been even up above the 50, but it's failed to maintain that by the end of the week, and it's dropped back in between the 0.382 and the 50 level. So just keep an eye on them, but it does give you an idea of where these markets come from and where it's going to. So again, you can see where I've picked the high and where I've got the low from. And then moving on to the 30-minute, I've got resistance at 33,004 and 32779 with support at 31,942. Again, you can always take screenshots or take a picture with your phone just to sort of keep these in your memory. Moving on to the S&P. So on the S&P, on the daily, again, we've got some levels there. So we've got 4302 as a resistance level. That goes all the way back to April, May. For me, that's a major level. The last time it rallied and got up there was great. It gave me an opportunity to buy put options. Now, this time it's nowhere near that yet, but I'd love to see it get back up there because I'll do more. That's just levels that I've got in my mind. So, again, don't be influenced by what I say or what I'm doing. You've got to make your own mind up. We're just here trying to help you as much as possible. So so that's the 4302 level, and then below that I've got the 4147 level and the 3930 resistances with support at 3707. There's the fibs. As you can see, it hasn't even got up to test the 382 level on the S&P yet. It's still holding lower. And it's got a long way to go to get up there, and that's tech stocks holding it back as well as others. So so moving on now to the 30-minute. On the 30-minute, I can see resistance at 38.82 and support at 37.16. Nasdaq. Daily, I've got resistance at 12.839 and 11.745 with support at 10.369. Again, tech stocks have not been doing very well. Bad earnings in Q3. As I said, we can sacrifice not buying the latest models of things. And as long as we've got something that works, it's fine. And they're moving on to Nasdaq 30-minute. I've got resistance at 11.360, 10.988, and 10.871 with support at 10.651. Now, I've added an extra chart in this week, and it's a comparison of how the Dow, the S&P, and the Nasdaq are performing against each other. So the blue one is the Dow Jones, the red one is the S&P, and the black one is the Nasdaq. And you can see, that the Dow has been performing much better, really, than the S&P and the Nasdaq. So, that sort of was pretty much what I've been saying on the other slides, but I just thought I'd give you that sort of visual analysis so you can see it for yourself. Moving on to the Russell 2000. Remember, these are the small and mid-cap stocks. I've got resistance at 1868. I've got support at 1729 and 1653. I've added the fibs onto this one as well. Again, as you can see, nowhere near them for the moment. And just going to move on straight away to the 30-minute. Now you've seen them. I've got resistance at 1862 and 1806 and support at 1770. Okay, so now let's have a look at some currencies. They were a bit mixed last week, especially for the dollar. Obviously weakened a little bit. With expectations they're going to start to cut back a little bit on these rate increases, and the euro and the pound. Well, what can you say about them? any rally in them is really dollar weakness. It's not because anyone's feeling great about Europe at all. So on the pound against the dollar, I've got resistance at 115.52 and I've got support at 110.71. On the 30-minute, I've got resistance at 114.34 and 113.96, and I've got support at 111.69. So here's the euro against the dollar. You can see that it's sort of okay. It's starting to range a little bit at the moment. Depends on what's going on with the dollar more, as I say, rather than the euro. And there I've got resistance at 10104 and at 0.9997, so just under the parity there, and support at 0.9765. On the 30-minute, I've got resistance at basically $1.01, and I've got resistance at 997, 0.997, same as the daily actually there, and support at 0.9777. So moving on to Bitcoin, crypto just seems more stable at the moment than the rest of the asset classes. Who would have thought that would have happened? Okay, so on here, brown number, so that's a breakout level at 27,385. I know I keep adding it and it's nowhere near, but with crypto, when it moves, it can be fast. So the moment I don't put it on there is probably the time it is going to break out. So I'd rather add it just in case. And then I've got resistance at 23385 as well, and support at 18,455. Moving on to the 30-minute, and here I've got resistance at 21,470, 21,408, support at 20,652 and 20,536 and 20,035. Here's the Bitcoin versus Nasdaq analysis. Again, as you can see, the Nasdaq's just moving around a lot more than crypto at the moment. Bitcoin just seems to have sort of found its range for the moment. It's popped out a little bit on the upside where it has been recently, getting dragged up by all the other asset classes, having that little pop on the upside towards the end of the week. But it's a matter of whether they can sustain it or not. Now, move on to gold. Again, with gold, it got dragged up on Friday, just with all these expectations and rumours coming out from China, I would say, much more than from what the stocks or even NFP actually did. So I've got resistance at 1680. I've got support at 1621. On the 30-minute, I've got resistance at 1687, and I've got support at 1662 and 1631. Finally, last but definitely not least, is WTI. It had a good rally on Friday, very aggressive rally on Friday, pretty much sort of close to $5. And again, just emphasizing, I would assume that most of that was on the news about China possibly easing restrictions. There's nothing been confirmed so far, so just be careful. And as I say, that probably steadied gold, commodities in general, to be honest. Okay, so now when we look at it on the daily, I've got resistance at 97.64. I've got support at 87.65, 83.23, 79.99. Oh wow, they're so wide apart so far, but oil does move for sure. I love trading oil. And you know, put the fibs on here. Okay, we're not up there yet, but again, it's just to give you an idea. I've sort of tried to work out the exact price. I think it's around about 96.90, where the first resistance line comes in from the fibs, the 0.382 level. And then moving on to the 30-minute, I've got resistance tighter at 92.65. I've got support at 91.96. That is a steep line though, so possibly that will get broken quite quickly. And I've got support at 87.85. So that sort of pretty much finishes the analysis. Again, as usual, just a reminder about our services, you know, what we can help you with, you know, whether you're new to trading or you want to improve your skills at trading. We've got something for everybody. It doesn't matter what level you are. You know, I help guys that have been in industry 20, 30 years to improve still. And the same as for what people that have not even understood what trading or the markets are about. You know, I'd love to get them first before they try their trading and lose money. Okay, so obviously we provide this. To support this, we do a daily newsletter, Monday to Friday. In that, global news, my views, and fresh chart levels daily and pivot points as well. We've got one-day workshops just to help you with any particular area that you feel could improve. We do 1 week courses, which takes you from zero to hero if you're new to trading. Also, again, there, you know, I mean, I even do stuff for employees of exchanges and that. They come to me because they want to understand it more from a trader's perspective. We've got the masterclasses. Now, the masterclass gives you that really deep dive into the fundamentals, as well as the technicals, the risk management. It covers every aspect of trading. And of course, you know, it's 4 weeks of guided learning, but you can split them up. You don't have to do them all in one go. So again, reach out if you're interested in any of those. Trader mentoring. So, you know, if you're already trading but you want to improve, we can work out a plan there for you to help you. We do consulting to a variety of companies, including brokers, exchanges, and of course we provide educational content to them as well as to individuals. Any questions, feel free to reach out to us at info@symaxfintech.com, or if it's a trading question that you'd like my answer to, then reach out to me at chris.tubby@symax-int.com. Have a great week and look forward to seeing you again at the end of next week. So take it easy, be lucky.